Hi, everyone. Welcome today. We are going to be talking about understanding your credit. My name is Olivia McCormick. I'm a certified credit union financial counselor, and I'm a senior education coordinator here at Case Credit Union. Today, we also have special guest Laura Hosey, who is our vice president of lending. Welcome, Laura.
Thank you so much for having me. I really appreciate being here today.
Thank you for joining us. We're excited. So we're going to go ahead and get started. So today's webinar is going to focus on a lot of material, but we're going to really hone in on a few hot topics right now. So why good credit matters, understanding the types of credit that are available to you, the do's and don'ts of utilizing credit, accessing your credit reports, factors that make up your credit score, and then lastly, we're going to end with tips on how to improve your credit. Everybody wants to know those. Before we get started, I want to talk briefly about financial counseling here at Case Credit Union. We do offer this free service to members and non-members. We offer both credit counseling and budget counseling. It can be utilized whenever you need assistance, as often as you need, we are here. And it's completely confidential. If this sounds like something you might want to do, you can go ahead and hop onto our website at kcu.org/financial counseling. So what is credit? Credit is the ability to borrow money or access goods or services with the understanding that you will have to pay later. Okay, it is not your money, and it is not free money. There's always going to be some kind of fee associated when you take on any kind of credit. How credit can impact you. Your credit history will play a huge role in many life events, such as getting a job, any kind of loan approvals, even rentals, and even getting a mortgage. They all check your credit. So the earlier you can establish credit, the better, but we want to make sure you are in a responsible place to do so before you do that. I'm going to turn it over to Laura to talk about our lines of credit that we see every day.
Thank you so much, Olivia. So couple of things to keep in mind are the different varieties of credit that we have, including revolving credit. So you're talking credit cards, that can be a department store card or a credit card that you might get from a financial institution. The thing to keep in mind is that when you are approved for that, you're going to get a maximum credit limit with a minimum payment due each month. That minimum payment due can be anywhere from interest only on some instances or a percentage of the amount that you borrow. So there will be typically a monthly payment that's going to be needed. Then we also have services that for credit, so such as utilities, cell phones, gyms, and those are not actually, some of them can be reported in your credit report, some are not. But the lines of credit and the services of credit all have a potential where money is going to be owed from you on a monthly basis. And then we also have installment credit, such as student loans, car loans, mortgages, personal loans, where you're going to have an original amount that's borrowed, and then you'll have an equal monthly installment or payment that will be due until that amount that was originally borrowed is paid back in full.
So let's talk about understanding credit cards. So credit cards are where you are extended a maximum spending limit and required to make at least a minimum monthly payment. If you carry a balance, sometimes that minimum monthly payment can go up. You do not have to take on the full line of credit that is being offered to you. So if you're not comfortable being loaned $2,000, tell them what you're comfortable with. Remember, you want to be responsible about any kind of credit that you take on. Lenders can often make money when lines of credit are not being paid in full each month because you are going to be paying interest on that amount. Do you know your interest rate? So educating yourself on interest rates can save you a lot of money. In a few minutes, we're going to break down exactly where you can find your interest rate offers. Do you need a credit card? Don't open a line of credit unless you know you are able to take on the payments. Remember, it's not just everything that you swipe. If you carry a balance, you will pay interest as well. Don't fall for the offers that come in the mail. They are often high interest and have variable interest rates. Not all cards do, but some do, and we'll show you exactly what that looks like. I'll turn it over to Laura to tell us about our Schumer box.
Thank you. So every credit card application that you would ever receive in the mail by law is required to have this particular box, which is referred to as a Schumer box. So within that Schumer box is really all of the fine print, if you will, that you really need to understand before you decide to apply for and get approved for a credit card. In that box, you will see the annual interest rate or annual percentage rate that's going to be assessed. And it's going to show you the range of those rates. It'll also define whether there's a different rate for purchases and or balance transfers. So look for that type of information. And then here on this particular one, it is showing that there are different rates for the purchase versus a cash or balance transfer. So when you, and that to define that better for you is if you actually take the card and go to the store and make a purchase, that is going to be charged at typically the lower rate. But let's say that you want to transfer a balance, or say you want to do a cash advance, such as at an ATM. If you do either of those things, the interest rate is going to be charged typically at a higher rate of interest, and that will be disclosed here on the Schumer box. And also, you are going to be able to find on the box if you have a grace period on your credit card. So for example, this one tells you right here how to avoid paying interest is if you use that credit card and then pay it off within the grace period, you will not accrue interest. But if you go beyond that, this one has a 25-day grace period, you would be paying interest. You will also see on the Schumer box if there's any fees associated with that Visa or credit card, not just Visa, but any credit card. So if there's a fee for the balance transfer, fee for that cash advance, or if there's a foreign transaction fee. Sometimes if you use a credit card outside of the country, you will be assessed an additional fee in addition to the interest that's being charged. And then the late fees, over limit fees, or return payment fees. All of those penalty fees are also required to be disclosed in the Schumer box. So just to repeat, it's super important. If you are getting a credit card, find this box before you sign the dotted line. Make sure that you understand the terms before you agree to them.
So let's talk about being responsible with credit cards. So things to know, things you need to pay attention to. When is your due date? You want to make sure that you are on top of that due date every single month. And do you have a grace period? Not all cards offer a grace period, but some do. A grace period is where you have an amount of time set between the day that your credit card payment is due versus when you will get a late fee. Some grace periods are 7 days, some grace periods are 10 days. Again, not all cards are offered for grace period, but check to see if you have one. Something might come up and maybe you need an extra day or two to make that payment. And so you don't have to panic if you have that grace period available to you. Know when your balance is reported to the credit bureau each month. This can be found a variety of ways. If you were to access your credit report, which we'll show you how to do in just a few minutes, you can pull and see exactly when each credit card is reported every single month. It is really important to know that not every single line of credit is reported the same day. So you want to make sure that you're knowing when that's getting reported to make sure that balance is low. And then interest accrues and balances aren't paid in full. You don't want to pay interest, don't carry balance. That's how you avoid interest on credit cards, at least. Okay, understanding installment loans. So these are loans with a set monthly payment and a due date. So you know when they are going to be due, you know the amount that is going to be owed. Some loans have a grace period, not all do. And then try to negotiate student loans extended to you. So if you do not need the full amount, you can ask them to reduce it. Do not spend it if you don't need it. We see a lot of college students that get themselves into trouble thinking that they don't have a negotiation on that. And so if you do not need it for school, you will have to pay it over a long period of time. So do not take it unless you need it. So accessing your free credit report. Unfortunately, times are a little weird right now, but annualcreditreport.com is here to help you. Due to COVID, they have extended and have offered you to check your credit reports for free weekly right now through April of 2021. So this is how you're going to do it. You're going to log on to www.annualcreditreport.com. You're going to see a screen that looks just like this. You're going to fill out a form to request your credit reports, and you're going to select all the bureaus or one of the bureaus at a time. Remember, you can pull them weekly, so you can select all three at once. And then you request and review your reports online. It is extremely important that you do this on a secure device. on a device that maybe you need to print, or a device you are able to download and save your documents. Because once you close out of the documents on that screen, you're not able to access them again. If you have any questions about that too, we can, we'll have my email at the end. What is reported on credit reports? I'll turn this one over to Laura.
Okay, so key things to keep in mind that are on a credit report. First thing is your personal information, and that's referring to your, of course, your name, your date of birth, your social security number, an address or addresses where you have lived. Because, you know, when you fill out a credit application, typically this is information that you need to disclose to the lender or whomever it is that you're applying for credit with. It's super important. It's absolutely critical that you make sure that the application and the information that is submitted is accurate, because this is what gets submitted to the credit bureau. And oftentimes when errors occur on a credit report, it happens when the personal information is submitted, because there might be a misspelling of the name, or perhaps the social security number is off by a digit, or an address is wrong. So it's extremely, again, critical and important for you to have accurate information and review your personal information when you do look at a credit report. Public records information, that is referring to, for example, a tax lien, meaning if you have taxes outstanding to federal, state, or local governments, those have the potential of showing up on your credit report. In addition to public records, that could be a judgment against you. If you had ever been sued by someone, or in a litigation at some point where money was owed, that too can show up on your credit report, and it is a negative mark. So that type of information can show up on credit, so keep that in mind. Utilities, if they are not paid, typically they don't show up, but if you pay them, and if you don't pay them, that is, they have the potential of showing up in your credit report as a collection. And collections, again, is another negative mark, something that can lower your score. And of course, the obvious, the loans, your credit cards, other credit accounts, you know, so any type of loan, a mortgage for a home, a auto loan, a home improvement loan, credit cards, department store cards, installment loans, personal loans, all of those types of loans have the potential of showing up on your credit. And then the collections, medical collections can show up. Medical collections can hinder your score. And then charge-offs. And a charge-off is when a lender has lent money to you and you have not paid as agreed. Typically after 6 months, they will charge off that debt, meaning they stop the collection efforts against you, but they put it on your credit report that you did not repay that debt. That is another black mark or negative mark on your credit. Additionally, bankruptcies, and bankruptcies can also show up in that public record piece, because a bankruptcy is handled by the judicial system. So your Chapter 7 bankruptcy or your Chapter 13 bankruptcies can show up on your credit. A Chapter 7 bankruptcy can stay on your credit report for up to 10 years. And a Chapter 13 bankruptcy can stay on your credit report for up to 7 years. So keep that in mind, even as to which bankruptcy you may decide to file, because they do have different stipulations as to how long it can stay on and actually cause damage to your credit score. And last but not least, are credit inquiries. These are hard hits, meaning where you had applied for credit with a lender, a financial institution, or a department store, someplace where you are actually trying to borrow monies. That inquiry shows up on your credit report, can stay on there for up to 2 years. Soft inquiries, say, for example, where you would try to get your or pull your own credit report, would not show up on your credit report, but a hard hit from a lender or something like that can show up on your credit.
So let's talk about how we report incorrect information on a credit report. So like Laura had mentioned, you want to make sure you're checking your name or previous names, date of birth, and social security number. If any of those are incorrect, you need to make sure you file that dispute. You want to see positive and not negative all over your credit report. Every bureau has a scale that is reflected differently, whether it's check marks or boxes that are filled in. So you want to make sure you're checking your grid. Are all the addresses listed correct? If there's any incorrect addresses out there, you want to make sure that you are filing that dispute form and reporting those addresses so they do not show up in the future. Do you see any lines of credit that are not you? If you do, you could be a victim of identity theft. That is huge. You want to make sure that you are checking your credit report. You don't want anything out there that is not your responsibility. Report any indiscrepancies to the bureau that you pulled the report from, or you can report them directly on annualcreditreport.com. When you pull your report, it will give you all the information at the very end of where you need to file any disputes. So I'll turn this over to Laura, our expert on lending over there.
Thank you. This is really a very important screen for us to focus on, because I really want everyone to kind of understand the vantage point from a lender when they are looking at you as an applicant for a loan. So we look for some basic things, but very important things. One of the first things we look for is the applicant having the ability or demonstrating a willingness to repay that debt. And that the number one resource we have for making that determination would be to look at your credit report, which is why we are talking about that today, and why it's so very important for you to be aware of how things are reported on your credit report, making sure that they're accurate, because that is a sign of someone's character. Actually, when you look at a credit report, if you are paying your current obligations well, a lender will have the assumption, or make the assumption typically, that you would repay them as well. You also, from a lender, they're going to look to see what type of income that you have. Is it verifiable? And is it sufficient for you to repay your current obligations as well as your existing? So we look at your willingness to pay, and then second, that ability to pay. So you need to have income that you're reporting. If you're self-employed, it's important for you to report that income to the IRS every year, filing a tax return that shows income being earned. A lot of times, what I've noticed over the years is that self-employed individuals will show that they've made a lot of money, but then in turn, they write off a lot of those monies that they've earned through expenses. And that actually is a hindrance to showing what your net income is. So having that verifiable, not just what you grossed, but what you net, that is what a lender will look for when they are looking at your ability to repay debt. And then we also look at what is in the financial institution's best interest. Is it in the best interest of a financial institution to grant credit to you or whomever it is that's applying for credit? Because we want to take on loans that make financial sense, especially with a credit union, because credit unions take the money from other members and lend it to the applicants. And we want to do our due diligence in making sure that we are making sound credit decisions, that we are investing our members' money wisely. Because when we lend to you, we are essentially investing in you. And we do want to understand that, yes, this person who's applying for credit has demonstrated the ability to pay, willingness to pay, and it's in the credit union's best interest because it's in our members' best interest. And then also, we want to give you loans that make sense for you, that are not going to put you in a more detrimental financial position than what you may already be in. Oftentimes, individuals may want to apply for an auto loan that is well outside of what they can really afford. They want that brand new $50,000 auto loan, but they're only making $20,000 a year. Maybe that's not your best choice. So you might want to apply for maybe like a $10,000 auto or 15. But we look to not put you in a situation that will put you under financial stress. So just recapping, willingness to pay, ability to pay, financial institution's best interest, your best interest. And then we also look at your history that you may have had with the credit union. And that's actually a part of that assessment where we look at your willingness to pay. If you have a relationship with a credit union, we are going to look at your account, and we will look to see if you've ever had loans with us before, and if you've paid us well, even if you haven't paid someone else so well. If you've had a good relationship with Case Credit Union, we would take that in consideration as a determining factor in granting new credit to you. So a lot of things go into that decision. There's a lot more I could say about it, but these are just some of the highlights.
Thank you. So let's talk about what makes up your credit score. So scoring models, there's so many scoring models that between FICO and VantageScore, every financial institution uses something different. So since there's various scoring models and calculators, these percentages could change, okay? These are just a rough outline of what your score really is compiled of. So payment history is 35%. The first thing that any lender wants to know is whether you've paid past credit accounts on time. We want to make sure that you are, like Laura was just talking about, you're making those payments and that we can see that history. It's a long-term situation. Accounts owed is roughly about 30%. So this is all of your lending accounts that will affect your credit, from credit cards to mortgages to personal loans. If it is on your credit report, we need to know how much is owed. That makes up about 30% of your score. Length of credit history. So how long have you had established credit? Remember, you want to take on credit early in life if it is a responsible choice to do so. Credit mix in use. So we don't want to see all of one thing as a credit mix. So we want to see, do you have a credit card or two? Do you have a mortgage? Do you have any kind of personal loans or an auto loan? That's a good mix of lending opportunities there. However, if you're somebody who holds like 8 or 9 credit cards and doesn't have anything else lended to you, that could negatively affect your score. So you want to make sure that you have a good mix there. And then new credit inquiries, anytime there is a hard pull on your credit, it will drop you for a little bit, but eventually it will come back up. They're going to dig deep in there. So hard scores or hard inquiries, excuse me, do affect your credit score. Credit dues. You want to get pre-approved by your financial institution. That's really good. We talked about having that financial institution history with your account. That's awesome. So if you get pre-approved by your financial institution, it's great. Look at interest rate offers for cards. So your credit score, again, will factor into interest rate approval. We talked about that Schumer box, so make sure you locate that Schumer box in any kind of credit card offer. Pay your balance off each month and on time. On time is super important. We want to make sure that you're not late on any of those, because if you are late past the 30 days, it can affect your credit score. Credit don'ts. Don't apply for multiple cards at once. New inquiries are 10% of your credit score. So if you're out shopping, you want to make sure that, if you're at the mall, you're not applying for every single store card that you see, because every single time you apply, it's going to negatively affect your credit score. Don't fall for credit card offers that come in the mail. Make sure you're reading that Schumer box. There's a lot of mail envelopes that will come in big and shiny, and they want to grab your attention, but you really need to read that fine print before you sign anything. Don't open and close accounts frequently. Remember, we talked about that credit history. We want to see a good open credit history. Don't let your balances grow. You want to make sure that you are keeping your balances to where they're affordable if you're going to carry any kind of balance, because you also have to pay interest. But you also need to make sure that you're keeping any kind of credit utilization on your credit card at or below 30% of what is lended to you. And do not co-sign for friends or family members. There's an opportunity there that, let's say they come to you and say, I'm not getting approved, I need a co-signer. There's probably a reason they're not getting approved. And one thing that can happen is that you co-sign with them, they don't make the payment, they can come after you and make you responsible for those payments. And you don't want to get yourself into that kind of situation. Ooh, the snowball effect. So this is a great tip for anybody who has found themselves in a lump of credit card debt. So the snowball effect is a way to kind of build up some payments over time to really throw a big lump sum of payment at your largest credit card debt at the very end. It can take a while depending on how much debt that you have, but it has worked for many people. It just takes a lot of patience. You have to be very stubborn with yourself to make sure that you're transferring over the payments. So how this works. So it looks like we have a card with a $500 balance owed, minimum payment of $25. Again, these are examples. We have the next largest card is $1,000 balance, minimum payment $75, $2,000 with $100, and then $5,000 with the $250. So you're going to start by paying the smallest debt off first. You want to start making more than that minimum monthly payment. And then once that $500 balance is paid off, you're going to throw that payment that you were paying at the $500, so hopefully more than that $25, and adding it to the balance that you owe in the payment for the next largest one. Once that's paid down, the snowball just gets bigger and bigger. So when you get to that biggest debt, you have a large sum of money that you can start throwing at it. It takes some time, and you can really get a long way in paying down some credit card debt if you stick to this. So Case Credit Union services, we offer checking and savings accounts, mobile and online banking, auto loans, Visa loans, business accounts, home loans. We have a variety of products and services for our membership out there if you're interested in anything that we offer. Money management feature with Case. Laura, are you comfortable talking about money management?
As far as this is some of the software that we have that's available to help individuals handle and figure out how they're going to pay their bills each month. It's an excellent tool because sometimes we lose track of where our money is going. And so in order to be financially sound, it's absolutely critical that you keep track of your spending. You can spend $5 a day on, actually probably more like $6 or $7 a day on a coffee. That adds up very quickly. And so this is kind of giving you a way of keeping control of your spending habits.
Yep, money management is a great opportunity there, and it's available on your online banking and your mobile app as well. And you can adjust it, make it personal. It's a great tool to utilize. You also have the option, if you are not a member of the credit union or you don't use money management, there's an app called Mint. Mint is a great resource to put all of your bills, 401ks, any of your bank accounts securely all in one platform. And it's great because you can use it on your phone, your computer, your tablet all at the same time, and it updates as you make updates yourself. There is a free version of it, and then if you want to get extensive, there is a paid version as well. Again, let's talk about free financial counseling. At CASE, we threw a lot at you today. It's a service provided to members and non-members for credit or budget counseling. So if you are interested in financial counseling, you can go ahead and go to our website. There's a form where you can fill out, and a financial counselor will reach out to you. So we want to say thank you for joining us today, and thank you, Laura, for jumping on. We really appreciate it.
My pleasure.
So if you guys have any questions, my email is there on the screen, or you can visit our website at www.kcu.org.